Lisette, thanks very much for joining us. Obviously, you've just launched the new research report on emerging trends for Europe. Just give us, I suppose, some of the key takeaways from your perspective.
Yeah, thanks, Richard. It's been a very interesting journey to get to the final results this year in the report, because we've seen different views coming through in different points in time almost, and also stark contrasts between short-term outlook versus more longer-term outlooks. And if you look over the short term, so the next 12 to 18 months, there's a huge optimism among market participants in terms of, yes, now we can get back to business. We've had the pandemic. It's over now. It's behind us. The huge optimism in the amount of capital available, both on the debt and equity side. Obviously, some variation in terms of sectors, but generally very abundantly. Higher forecasted returns for next year. And so it's a huge optimism. Actually, we were quite surprised by the strong level of optimism. If you look at confidence in business, headcounts, profitability, we're back to 2014 levels, as if the pandemic never happened almost. And we had expected some optimism, but not to that level. If you then look a bit further ahead, people seem to struggle with what restarting an economy really means. And obviously, nobody has experience with that because we've never done it before. And that overshadows that optimism a bit, because there are concerns, obviously, around cybersecurity, but also inflation, construction costs, the most prominent short-term concerns. And then there is a wide variety, and I think more recently that variety has been growing, what that impact might be. Over summer, we saw most people thinking that inflation would be short-term, just linked to that restarting the economy. But now people start to become a bit more concerned that it may take longer and may not just be linked to rising construction costs and labor, but may also affect the core of real estate, GDP growth, high interest rates, etc. And also, if you look between the next 12 to 18 months and across a 5-year term, on every aspect that we survey, people are more concerned over a 5-year period than they are for the next year, which I think is striking. And then there's the last component that is linked to the more longer term, where we ask specific questions around organizational transformation. And what we see is around 2/3 of respondents think there's an absolute need for real estate businesses to transform. But also at the same time, you see there are still cultural barriers to change, thinking that what we do now is actually fine. And there's also some interesting findings in what are the main drivers, such as real estate as a service, changing consumer demands, ESG obviously as an important one, the demand for flexibility, amenities, etc. But it seems that the industry hasn't got to grips yet with what that organizational transformation means in practical terms. There's a strong understanding it needs to happen. But on the one hand, people seem busy with doing business today and tomorrow, and not having figured out completely what that organizational transformation means. What do you need to do to successfully hire new non-traditional real estate skills? How do you truly embed technology in your organization? And those are still questions out in the open.
There was quite a big focus as well, Lisette, I noticed, on things like affordable housing. You mentioned ESG there and impact. Have you seen a marked change, I suppose, looking over the past couple of editions of the research and a growing focus on those areas?
What we've actually consistently seen is a growing concern across the industry on social issues. We've been surveying that already for quite some years, and social inequality, housing affordability, and all those elements, we saw concerns only increasing over time. So yes, the industry is very concerned, and obviously that's strongly accelerated by the pandemic. We see also a strong interest among the industry to invest in specifically social and affordable housing. Both sectors were in the top 10 of most preferred sectors to invest in, both from a development as well as an investment perspective. And generally, people recognize that returns might be lower, but on a risk-adjusted basis, it's actually a very interesting case. But what you more and more seem to hear, we heard it a bit last year, we hear it much more this year, is around the political tendencies and interference around social housing. And the industry is struggling with that.
It's interesting as well, Lisette, I think you mentioned there the sector prospects, that there's new energy infrastructure, life sciences, data centres, healthcare, senior living. A lot of those alternatives, do you think those are here to stay now in terms of investor attentions?
It shows a couple of things. It's a very similar top 10 as we saw last year, all driven by technology at the time and obviously what proved most resilient during the pandemic. But generally what we have here is the smaller sectors, new energy infrastructure, data centers, life sciences. Some can obviously grow bigger, also following structural demand and megatrends. We see some of the residential sectors, etc. Some are also smaller by nature. Life sciences is basically a subsector of offices with very specific demands, but it will never become the most dominant office subsector that we have because it's a very specialist element. What I think it will also show is that investors have moved to a much more granular level of asset allocation. In the past, we just had office and retail. At some point, we got also logistics, and then it was residential. But it was just one big pot. Well, at the time, there were already many differences now between retail parks, shopping centers, high street, etc. I think now there's the recognition, you could almost say, that if you want to do a proper asset allocation, you need to look into the specifics of the different subsectors. Because also retail overall, there are certain parts of retail that suffer. But retail parks, factory outlets, food-related retail has been performing really well. So I think this really demonstrates that level of detail in terms of what type of asset classes are you investing in is structurally becoming far more granular than we've seen in the past.
Looking at the locations, interesting to see London coming top in terms of overall real estate prospects, followed by Berlin, then Paris, Frankfurt and Munich. Were you surprised there to see London at the top, especially, I suppose, potentially because of concerns around the office markets and London obviously being a dominant office market?
That's a very good question. I don't think we were maybe a bit surprised by the number one position. That's always very hard to predict. What you see generally now is that the Brexit concerns and uncertainties are largely behind us. COVID is largely behind us. At least that was the expectation when we did the survey. And what you've seen is that in terms of pricing, London really stayed behind the other capitals and the biggest cities in Europe over the last 5 years. What we heard a lot about is the famous 1% yield gap between London offices and kind of the peers. So I think now people start to bet on that yield gap and thinking that, well, from a long-term perspective, London still offers very positive outlook. And what we also heard about, people really believe in London reinventing itself beyond the financial services towards technology and other sectors. So that's something that I think, and what we generally saw as a bigger trend, almost all cities in the top 10 are the safer havens in Europe. It's the more stable cities. All the German cities are in the top 10. Berlin and Paris are on place second and third. So it's the liquidity that investors are looking for, being able to maneuver in case it's needed. And yes, there may be somewhat lower returns, but in this environment, that's a preference versus the more, say, opportunistic or somewhat more core plus value add opportunities.
Yeah, it's really fascinating as ever to get this kind of brief window on what the real estate markets are thinking. Thanks very much for also sharing your kind of insights on the research, Lisette. Thanks for joining us.
Thanks, Richard.